Hello, I'm Srinivasan. Namaste. Welcome to my channel, Think and Link series. Today, you may be aware that in the next few days, I think from 6th to 8th, the Monetary Policy Committee is meeting. RBI's Monetary Policy Committee is meeting. And this committee will be meeting to take the review of the extant economic situation and then perhaps revise or restate or even change the policy for the ensuing period. You all may be aware that it is a bi-monthly policy, meaning that every 2 months, the earlier policy is reviewed and the new policy comes into play. And the new policy states what actions are to be taken and what are the existing ones that needs to be continued. So, in other words, this particular monetary policy committee will decide the fate of policy rates. The question before them would be, should it be continued or should the rates be slashed? Only two questions in front of them. Now, as you all know, that MPC has got a huge amount of data. And it is this data which helps them to come to a decision. But in this decision, they are guided by two most important macroeconomic metrics. One is inflation and the other is growth rate. That is the growth rate of the Indian economy. Now, when we talk about inflation, we need to know that the RBI Act was amended way back in May 2016. And from that day onwards, it became imperative for RBI to target an inflation figure. So a formal inflation target of 4% with a tolerance band of 2% was introduced. That means the inflation could range from anywhere between 2 to 6%. And anything above that, the alarm bells will start ringing. So the question now is, what can we expect at the conclusion of the MPC meeting on 8th of February? Would the key policy rate remain steady at 6.50%, or would there be a cut in rates? This is the question that we need to answer. And to answer this question, what I'm going to do is, I'm going to examine some of the macroeconomic factors, and then we will take an informed conclusion. Right? Okay, let's go ahead. And first, let me start telling you that as a brief background. This policy rate hikes, that is the interest rates of, the repo interest rates, the reverse repo interest, the bank rate, all these things were hiked, or the commencement of these hikes started from May of 2022. It stayed on for a good 8 months till February 2023 when the pause button was hit. Now, from February 2023, the key rates have been steady at around 6.50%. Now, during this period of May to February 2023, almost 250 basis point interest rates were hiked. Now, if you were to see the current scenario says, or it looks that the inflation has been largely within the 2 to 6% target range. It has been there. There has been a spike here and there, but by and large, it has been within this range. And the RBI governor had already made it very clear that it is possible to bring the inflation back to its 4% target only in the medium term. So it was a very candid admission by our governor, Mr. Shakti Kanta Das. Now, when I'm talking about inflation, we need to understand that inflation consists of two important components. One is core inflation, which means it's an inflation where food and fuel is not included, and the other is the food inflation. Now, if you see the figure for December, our retail inflation was 5.69%. 5.69% in December. Now, in terms of a sequential increase, it has been a 14 basis point increase from the November figure. But on a YOY basis, that is year on year basis, there has been a reduction. It has been lower by 3 basis points. That is, if you compare it with the December 2022 figure. So, core inflation has been well within the threshold limits of RBI. It is only the food inflation which is worrying. And why is it worrying? Because the rabi crop acreage has declined by 3%. And that definitely will hit the overall food grain production or the overall food grain out. And why has the rabi crop acreage gone down? This is because of a below normal rainfall. And this has caused moisture deficit in the soil. And not only that, there has been decreased water storage in reservoirs, which has impacted the grain out. Another, I would say a feather in the cap for this government was when the interim budget was introduced. The interim budget surprised everybody by sharply slashing the fiscal deficit. Now, that's great news. The government reduced its fiscal deficit target to 5.1% of the GDP in 2024-25, and which is almost 70 basis point from 5.8% deficit that we are currently experiencing this particular financial. Various agencies, right from IMF, the World Bank, Asian Development Banks, RBI, global rating agencies, have all forecast a growth of around 6.9% to 7.3% during this particular uh, financial. And everyone and everybody of these institutions, all the institutions, are very clear in stating that India continues to be a growth story and India continues to be the fastest growing major economy in the world. So, given the current situation, with the economy doing well, I don't think there are any compelling reasons for RBI to reduce the policy rates. So, I expect that the key policy rates are going to be steady at 6.50%. Now, there is another interesting thing that I would like to share with you. In this connection, Reuters, the news agency, they conducted a poll of 60 economists. And out of 60, 59 of them expected the rates to remain unchanged in the February MPC meeting. Now, two-thirds of these economists said that RBI will keep the rates unchanged till the third quarter of this year. And then perhaps there could be a rate. Two-thirds of them, but a few of the economists expected the rate cuts to happen in the second half of 2024 because they believe that headline inflation would more or less stabilize at 4%. Yes, Reuters poll also mentioned the risk of breaching the 6% upper limit inflation target, and that RBI was likely to monitor commodity and food prices closely. And as I told you, RBI would keep an Arjuna's eye, in the words of RBI governor, on the inflation impact. So I would like to reiterate that currently our economy continues to be in the Goldilocks phase, with growth broadly steady. We expect the rates to remain unchanged, and see you once again. Till then, thank you. Please like, share, subscribe my channel. I will see you with another topic. Thank you.